Good morning, advanced accounting students. My name is Emily Peck, and today I will be speaking with you guys about GASB 55, in particular to section 33, where it discusses the capital projects fund. So we're going to go over some definitions and overview, and then jump into an example problem, and in the end tie it into a city who is currently in the process of determining how they are going to finance their capital project fund. So what exactly is the Capital Projects Fund? This is a fund that accounts for and reports financial resources that are legally restricted and contractually required for the acquisition of capital assets. The primary purpose is to ensure and demonstrate the expenditure of the dedicated financial resource is both legally and contractually compliant. So basically, when the money is given or the loans are given for a particular project, it needs to be spent solely on that project. Whatever is raised in excess of the budget or the actual amount spent for the project, that can't be put towards a different project altogether. It needs to be put towards the loans that may have been taken out to fund the project initially, or anything else related to the project. But it can't be saved for a different project in the future. So moving on, the total cost of a capital project is accumulated in a single expenditures account, which accumulates until the project is completed, at which time the fund ceases to exist. So the fund's life is based on the timeline of the project, rather than on a year-to-year focus. It's more based on the project than on the fund itself. So just to give you guys a brief overview and maybe just a little bit more background information on the Capital Projects Fund. So the basis of accounting for the Capital Projects Fund, we use the modified accrual basis. And there are two types of capital projects. There's a general one where it benefits the public. So anyone can have access to these things and anyone can use them. These would be things like public buildings, roads, highways, bridges, parks, sewer systems, and plant and equipment, etc. And then there is the other kind of capital project that's called special assessment. And this is more for private benefit. So these would be things that only maybe a certain region would have access to. So things like street improvements, curbs, sidewalks, street lighting, sewage, etc. So with this special assessment, the people who would normally benefit from them would be the people who would be taxed for it. So based on a particular region, they would be taxed for the special assessment project fund. So now that we know a little bit behind the capital funds project, I want to go into an example of seeing this played out and looking specifically more at the journal entries. So this problem is that the voters of a new city authorize the issuance of $20 million in general obligation bonds to finance the construction of a new highway. The project is expected to cost $30 million, with an additional $10 million to be financed with a state grant. So we have the $20 million from the city and $10 million through a state grant. Although the grant may be paid in advance, it is intended to reimburse the city for actual cost incurred. So to start this problem, we need to set up our budgetary accounts. And we do this by labeling these accounts with estimated instead of just like the bond proceeds. We'll use bond proceeds without the estimated once we have our final numbers after we've spent the money on the project. So we'll debit estimated bond proceeds for $20 million and estimated grant revenue for $10 million. And we'll credit fund balance for $30 million. So this is to record the estimated revenues and other financing resources that we are expected to receive. And then to record the appropriations, which is our estimated expenditures. This is basically the approved budget for the account and just having that down to back it up. We'll debit our fund balance for $30 million and appropriations for $30 million. So the next step in this problem is to look at the issuance of the bonds. So the city issues $20 million of bonds. Because of the favorable market conditions, the bonds are sold for $20,200,000. So essentially they're sold at a premium. After deducting issue costs of $150,000, this would be if we went through a broker who sold the bonds for us, the sale nets $20,050,000. So looking at the journal entries, we can see that the cash would be debited for $20,050,000. This is representing the net sales from the bonds. But we will also debit issue costs for $150,000. And then we'll credit bond proceeds for $20 million and bond premium for $200,000. And that entry is to record the issuance of the bonds. However, we raised a net of $50,000 over what we needed for the project, and as we learned earlier, we can't have extra funds essentially. So these funds need to go back into this capital funds project somehow. So we will actually be transferring the $50,000 to the debt service fund. So we only have $50,000 left because the bond premium is somewhat counterbalanced by the issue cost from the broker. So we just have the $50,000 that we need to account for. And we'll do that by debiting transfer to debt service fund for $50,000 and cash we will credit for $50,000. And this is a transfer the bond premium net of issue costs to the debt service fund. So next we need to look at encumbering available resources. So the city signs several construction-related contracts for goods and services to cost $16 million. Capital projects funds, no less than the general fund, can avoid overspending by encumbering fund balance and the amount of purchase orders and similar commitments. So to do so, we will debit encumbrances for $16 million and credit reserve for encumbrances for $16 million. And this is to encumber $16 million for the contract. So now we are going to be recording part of the grant that the state government promised us. They promised us $10 million, but they are going to give us $8 million now. So to be consistent with the approach taken in other government funds, the recognition of reimbursement grant revenue should be expenditure driven. Hence, the city should record the advance payment from the state as a liability until it is spent. So we'll debit cash for $8 million and credit grant received in advance, which is shown that it's a liability, for $8 million. And this is to record the advance from the state. So next we are going to look at the recording of expenditures. So the city receives and pays contractor invoices of $15 million for construction and related services. So we are going to debit expenditures construction related for $15 million and we will credit cash also for $15 million. Upon recording the expenditures in the capital projects fund, the city must reverse the related encumbrance accounts and recognize that the revenue was previously deferred. So we are going to reserve for encumbrance for $15 million, and then our encumbrances will be credited for $15 million. And this is to reverse the encumbrance entry upon receipt of services. So then we next are going to debit grant received in advance, which is a liability, for $4 million, and grant receivable for $2 million. And we will credit revenue from grants for $5 million. And this is to recognize the grant revenue base upon incurring all $10 million of affordable costs. So to bring this all together, we can look in the news and see that West Dundee, Illinois actually had an article published about them on October 24th, so fairly recently. They are currently going through the process of creating and kind of determining how they're going to create their own capital project fund. because they are wanting to do a 6-year project consisting of road resurfacing, parking lot repairs, building upkeep, infrastructure work, vehicle purchases, and other maintenance work. And they're expecting that it would cost $900,000 each year when they only have $550,000 of revenue coming in. So they need to figure out how they are going to finance this capital project that they are wanting to complete. So here's my list of resources that I used throughout my presentation. Thank you guys for listening, even though you were required to. I hope you guys were able to learn a little bit about the Capital Projects Fund and everything that goes into it. Have a great day.